The whole world economy depends on U.S. consumers continuing to consume and buy. When American consumers stop buying, the whole world is going to sink into a serious recession. And then guess what all the central banks all over the world will do more of? They'll print money faster than ever. Okay? They're all terrified of a recession. Okay? So the whole world depends on U.S. consumers consuming, and in turn U.S. consumers have depended heavily on the rising prices of their homes. What if that stops? Well, it's stopped. Okay? The Economist magazine says the U.S. real estate boom has lifted the U.S. economy in 3 ways. It's boosted residential construction. Well, we see what's happening to that now. An 84% drop in one company is pretty big. It's made people feel wealthier and so encouraged them to spend more, and it's allowed homeowners to use their property as a giant cash machine, taking out trillions of dollars in home equity loans. The economic downside of this real estate bust will be that the wealth effect will be decimated. The value of residential real estate is now almost 50% of U.S. household wealth, almost 50%. Consumer spending has remained strong over the past 5 years because 68% of American households who are homeowners have felt rich because of the rising home values. That will now be reversed. It's kind of interesting. We just did one of these conferences out in Orange County, California, where real estate has begun to drop. We had about 4 times more people come to that meeting than have come in Dallas. We sent out an equal number of invitations. But those people are a little bit nervous. All of a sudden, they're beginning to realize their wealth machine is now beginning to roll over. And so it's interesting. It was easier to get people to come out and listen to our gloom and doom scenario, if you will, in California. And I think it would be in Florida today as well, than it is in Texas, where people are still feeling pretty good about things. Okay, consumer spending has remained strong over the past 5 years because 68% of American households who are homeowners have felt rich, and because of their home values rising, that's now changing. Employment will drop as U.S. real estate declines. Over 30% of new employment over the last 3 years was directly from housing, construction, building materials, real estate brokers, mortgage brokers, etc. Already layoffs by the hundreds of thousands are occurring in the building, real estate, and mortgage industries, but you think those will show up in George Bush's unemployment statistics? I think that they will find ways to fudge on those. The effects of the bust will be national and not regional. This is an important point. It's going to affect the whole economy across the whole country. Whether your home value drops or not here in Dallas, and I hope and pray it doesn't, it's going to affect the overall U.S. economy. So this is going to create a national recession. Accelerating mortgage delinquencies, defaults, and foreclosures, that is the wave of the future across this country over the next 3 to 5 years. Record household deficits at a time when the U.S. economy is extremely fragile, when residential real estate is more than doubled in 5 years, or mortgages or debt has gone from $4 trillion to $8.7 trillion. $4 trillion to $8.7 trillion on residential real estate mortgages. Doesn't that sound like that's out of control? I mean, how many years did it take us to get to $4 trillion, and in just 4 or 5 more years we went from $4 trillion to 8.7? It's not sustainable. Americans are the most indebted with real estate and consumer debt in history, and millions of Americans are spending more each month than their income. Now, these numbers kind of really got my attention when I saw them. In 2005, household income rose $93.5 billion, or 1.2%, while private household debt rose $1.2 trillion, or 11.7%. Household debt rose 10 times faster than household income. Conclusion, the reality is we're living in a debt-fueled economy as opposed to an income-fueled economy, which we probably knew in the 70s and 80s. Psychology has clearly changed from greed to fear, or it's changing, in the process of changing. The truth is there are no soft landings after a real estate mania. Burst balloons do not reinflate easily, and neither do burst financial bubbles. It generally, when a financial bubble bursts, it generally takes at least a decade for interest to return and for the market to begin to build up again.